The market is absolute crap and Solana is not getting spared from the price declines. Let's have a look at some on-chain metrics. Let's have a look at actual usage. Is this potentially an opportunity to buy this dip? Because I believe the best way to beat the market is to have better data than most others, right? If we want to figure out where bottoms and tops are, we need to find out who's buying, who's selling, who's using Solana. Now we all know what Solana had been used for in the last months, and that was meme coin trading. Just have a look at this. This is dexscreener.com and this is all tokens ordered by their liquidity pool size. And we pretty much only see meme coins here. Solana completely turned into a meme coin casino. And since meme coins don't have any real world usage, it's 100% player versus player. And of course there's a luck component involved, but there's also skill involved. As in the people that are most skilled tend to make money from the meme coin game. Thus, the longer the game goes on, the more capital gets concentrated in a few hands and the majority loses their funds. That's the reason why transactions tend to decline over time if there's no new people coming into the space. Now let's compare Solana to other blockchains. This is DeFi Llama and this shows the total value locked development in the last month here on the second last column. Solana lost 11% of its total value in the last month. With that number, it's pretty much in the middle. Ethereum lost to a similar degree, Base lost even more, Arbitrum lost a little bit less. This is then how that looks like over time. This was the first DeFi summer in 2021. Then we saw the nice revival since October of last year. This is where meme coin trading started. And now in the recent past, we see again quite a bit of a hiccup. The liquidity on decentralized exchanges isn't yet that much affected. And that's quite surprising because the people that deposit their capital into decentralized exchanges, into those liquidity pools, they get their return paid out via the trading fees. So when you're trading, say on Radium, then you're paying a fee and the fee goes partially to liquidity pool providers. When trading volume goes down, then in theory, the return of the capital providers goes down as well. And thus the incentive to deposit goes down as well. So there should be, at least long-term, a correlation with the capital in decentralized exchanges and trading activity. Trading activity went down, but the capital so far is still relatively constant. So here's that trading activity. It peaked out in the middle of March of this year. Since then, we rather see a decline. Other narratives unfortunately can't catch up either. This is the platform fees of NFT marketplaces on Solana. That peaked out even a bit earlier at the beginning of March of this year, but also a very clear downtrend, unfortunately. And if history is any indication, that low level can sustain for quite a while. Now, not all charts are going down. An interesting chart that's going up is how much Solana is being staked. So more and more SOL gets locked up. This should reduce the supply, and with a reduction in supply, the price in theory should go up. So have a look at this. That's a Solana that's been staked, measured in SOL, and this continues to increase quite a bit. But here's the problem. Solana also has token inflation. We've got a circulating supply of 462 million SOL tokens. This is the supply development over time, and we are currently at an annual inflation rate of 5.2% roughly. 5.2% of the current supply equals to 24 million SOL tokens that hit the market every year. Let's check this out again. This is in total 24 million, but this didn't happen in 1 year. This happened over the span of 3 years. So it's roughly only 1/3 of the newly added supply every year that gets locked up. So the staking program is relevant, but relative to the supply expansion, it can't unfortunately supersede this. So there's still long-term sell pressure on SOL. This is not like Ethereum where we've got a shrinking supply, or like Bitcoin where a lot of supply gets scooped up by the Bitcoin ETF, or where some of that supply even gets lost. For Bitcoin, on average, roughly 2% per year gets lost. Now let's have a look at relative performance. I don't just like to look at US dollar charts, right? Because when Bitcoin goes up and Ethereum goes up, then Solana tends to go up as well, and vice versa. What I believe is more important is outperformance, because that's in the end the reason why we get into altcoins in the first place, right? We take on more risk by buying Solana over Bitcoin. Thus, we want to get more performance, right? If you take on more risk, you need to have more performance. And so this is a chart most people look at. This is just Solana in US dollars. And historically, historically we seem to be relatively high, and we can see very nicely that since Q3 of last year, SOL performed quite well in terms of US dollars again. But there's another measure. This is Solana dominance. This is how much of all of cryptocurrencies market cap is in Solana. And that's currently at roughly 3%. And that is somewhat at a historical high. Here's Solana relative to Bitcoin. It's not at an historical high. There's actually quite a bit of room. If Solana was to catch up with Bitcoin's performance, reach those historical highs, that'd be another outperformance of roughly 80%. But here's the chart that I believe is actually the most important. And that is Solana relative to Ethereum, because Solana and Ethereum are competing for similar spaces. And here we see how nicely those tops align. We have recently hit several times the peaks of 2021, and the potential upside isn't that massive anymore. It's 35% until the air gets thin again. The potential downside though is pretty high, right? Minus 66%, or maybe in the worst case, minus 80%. Now, why do the tops align here so well in the Ethereum based chart? I believe the answer is correlation. Have a look at those various altcoin correlation coefficients relative to Bitcoin and relative to Ethereum. The higher the number is, the more those two assets tend to move in tandem with one another. And the numbers here in the first column tend to be lower than the number in the second column. This is true for the 90-day correlation coefficient. It's also true for the 1-year correlation coefficient. The numbers to Ethereum tend to be higher than to Bitcoin. So most altcoins tend to be higher correlated to Ethereum. So actually what we are doing with buying an altcoin is we try to outperform Ethereum, not necessarily Bitcoin. The kind of person that buys into Bitcoin is not necessarily the same kind of person that buys into Ethereum or into Solana. The Ethereum and Solana investors tend to be more speculative in nature. They tend to enjoy this player versus player game much more. The Bitcoin investor simply just wants to allocate and forget, maybe diversify together with the stock investments and the property investments. And so when it's the same kind of person that buys Ethereum and that buys Solana, then that same kind of person might also decide to enter and exit the market pretty much the entire portfolio. That's probably one of the reasons why we see that much correlation with Ethereum to the altcoins. And that's probably also the reason why we see those tops align so nicely for Solana relative to Ethereum. And so here's the reason why the market is suffering so much. This here is the stablecoin market cap. And that market cap, unfortunately, isn't growing for the last 2 to 3 months. There's no more fiat currency flowing into crypto that can push up the prices in aggregate. Here's a more long-term chart of that stablecoin market cap. When this is going up, then crypto is expanding. When this is going down, we tend to be in a bear market. Currently, we are expanding again since October of last year. But unfortunately, that expansion has recently stopped. And maybe we will see a crash again. Very similar to the Terra Luna collapse, right? When the Anchor protocol went belly up. I don't really like to get risk on right now. I believe the risk versus reward isn't really warranted for Solana. I believe that there's still too much capital locked up in the decentralized exchanges relative to the trading volume. So people don't really get a lot of trading fees. At the same time, we don't see a lot of money flowing into crypto as a whole. At the same time, we see that there's maybe another 30% outperformance versus Ethereum, but a lot of potential underperformance. Again, relative valuation is pretty high. And when the situation is so bleak, why not bet on falling prices on things like this? I'm shorting this token over here. Very little volatility, very constant underperformance because again, the token supply is increasing relatively fast. And I've made a tutorial on how to bet on falling prices over here. Feel free to check it out. It's part of the premium membership. It's down below. It's the bitcoinstrategy.com. This is also where I'm sharing what this asset actually is. If you've got like $3,000 or so to put on this short, premium should be for free. Again, I can't of course guarantee this. There's always risk in any investment, but that's what I'm personally doing, right? I'm not trying to find the needle in the haystack, the one asset that might outperform the rest. Right now, there's no more crypto expansion. It's player versus player. So why not simply go with the haystack underperforming, right? And most altcoins do worse than Bitcoin most of the time. Why not bet on that and get the odds in our favor? If your portfolio isn't yet large enough to justify premium, there's also a free Telegram. The link is as well down below. Looking very much forward to chatting with you. Cheers.